All right, we are live. Hey, everybody, welcome to the VA hosted call with Equity Prime Mortgage EPM. We've got two very special guests that don't actually get out to see the light of day very often, as Joe's screen shows. Like he just lives in the dark. No, I'm just kidding. I'm joking, you guys. These two guys are phenomenal. They're great resources for me, great support, and great friends of VA. EPM is a great friend of VA, and actually, we're happy to announce that EPM has come back again to support, partner, and sponsor with summer camp. So June 13th, if you're watching this, you're catching the replay, get your summer camp ticket, come out, hang out with some of the coolest people out there, just shooting guns, riding on the river. We just picked up a new M107. Yep, the Barrett 50 cal suppressed. It's going to be running at 1,000 yards again. I am super excited for that. Randy Teagle is going to be running shotgun courses. Like, we're going to have a blast, literally, figuratively, all of it. So join us out there at summer camp this summer, June 13th through the 16th. Okay, the reason for this call. And Phil, thank you. And I said, hey, I want to do this. And you're like, yes. And I know who's going to be on the call with me. It's going to be Joe. And I'm like, all right, I love this. I get the two big hitters when it comes to VA underwriting at EPM. We're going to talk about this. We want to talk about the manual underwrite. Personally, I have seen you guys do some pretty make sense. I don't want to say miraculous because it wasn't. It was make sense underwriting. It was, hey, the handbook said this. The documents you had supported that. Therefore, we can definitely write this loan, right? And you got it done, and it was pretty cool. But we see in VA COC or in the pros only group, sometimes people are like, oh my gosh, I have to get rid of this, or I can't do this loan. I'm getting a refer eligible. And we're like, whoa, hold on. That's actually not a dead deal. That just has a little bit of hair on it we got to deal with, right? We got to get through this. So what I would love to do is have you guys introduce yourself, and then let's dive in and talk about why manual underwrites are so powerful and how we could actually get them done better or faster or more efficiently to continue supporting the veteran and active duty community we all serve. Phil, what'd you kick off?
Yeah, no, thank you so much. And like I said, I think maybe it was like 1 minute after you guys asked me to do this. I was like, yep, and make sure Joe's on it. Manual underwrites. So I'm Phil Brousseau. I'm the vice president of underwriting at EPM. We, from the time I got here, and I think it's important to sort of explain it from the beginning, right? When I first got here, one of the biggest asks placed on me was, you have to make this VA process better, not just VA manual, but VA in general. We have to make sure that we're making the process better for everyone. And I come from a world prior to this of manual underwriting, right? So so for me, that was step one. Okay, well, how do we get this to be, right now we're doing 80% manual here. Joe knows this. I mean, it's more rare to get an approved eligible now than it is to get a manual. So that was step one. Hey, Phil, you got to fix this. Step two was me harassing Joe for 3 or 4 weeks to make the jump to get here, because I knew that if I was going to build the team I wanted to serve our veterans the way they need to be served and to provide our clients the service they need to get, he was the guy that we needed to do. So that was, I guess that's a turnover to you, Joe. You want to?
Sure. Okay, my name is Joe Davis. I'm an underwriting team lead over here at EPM. I've been in the business actually 11 years exactly yesterday. So I've been doing this for a little bit. But yeah, I mean, just to echo Phil's point is that he brought me in because he knows that I grew up in the VA program. I actually went kind of backwards. I started learning. I was a disclosure person first. Then I was an AM processor. Then I started doing EARLs. Then I got my full VA. Then I learned FHA and then conventional. So I feel like I got a little bit of a leg up on some other underwriters since I learned all that stuff first. But we come from a very common sense standpoint as far as VA manuals and underwriting are concerned. So if we can make it work within the guidelines, we will try our best to make it work, period. So
that's perfect. So let's talk about, I don't disagree with you either, Phil. I mean, I think that most of the loans coming through, the easy ones were done a while ago, right? We were working with those that had some problems. They're trying to get through this. We're there's reason, right? Home ownership is important. Home ownership is valuable. Home ownership sets the cadence for a lot of things going on in life after the fact. It changes lives. Let's talk about the manual underwrite. What all do you do? How do you accept those? Joe, maybe you should speak to this. Like, how do we get a manual underwrite from, okay, man, my AUS just came back refer eligible. Now what?
Okay, sure. I guess we're just going to start at the numbers. I mean, VA says their max DTI technically is 41, right? When that's not actually true. So right off the jump, we already have some flexibility there. So 41 really only comes into play when we're talking about residuals or some other compensating factors. If we go above 41, we've still got plenty of room to operate. So from there, I'm going to go down the line. If we're talking about income, I'm going to look to make sure it's stable and reliable. If we're talking about active duty personnel, I'm really not going to worry about that much. As long as we have our ETS stuff straight, or we can document something happening after service, then we should be covered across the board. As far as assets are concerned, I'm going to be looking at your bank statements. I'm going to be looking at your cash flow, seeing if there's any type of negative balances, any undisclosed debts, things that might not pop up on a credit report, but also might show that, they're saving, they have the ability, they have enough room in their budget to make this thing work. And then as far as a credit uh, overall review, I think it's just going to depend on the circumstances. I mean, generally, I'm looking for 12 months clean credit. That's the VA's ask. That's generally what is their definition of satisfactory credit. Generally, when we're getting referred, most of the time we're not going to have 12 months clean credit. So from that standpoint, I take it in 12-month chunks. When was the last late, and then when was the last late prior to that? If we can show that this late was isolated, I'm most likely going to make it work. If there's one or two lates maybe, and it's still in a group and we can show isolated with an extenuating circumstance, I'm probably going to make it work. But when we kind of run into the place of we've seen some derogatories for a very long time, pretty consistently, but now we're talking about extenuating circumstances, I might be less on board there, and we'll truly want to see 12 months clean credit reestablished, because even if we're back to where we want to be, we still have to prove it on paper. So eh, eh, outside of that specific instance, I'm going to be pretty open to any explanations you guys, the borrowers or the LOs want to provide, any stories. I think the number one tip I would give to everyone when they're submitting a manual underwrite is to put an LOX in the file. Explain the situation, explain difficulties, explain anything you think I'm going to have trouble with, because Phil and I have done this presentation before, as far as talking about manual guidelines and how we look at them. Don't have me telling your story. If there's something, there's a difficulty, there's something going on, tell it to us. I'm not going to hold anything against any veteran or any situation that's happened in the past because there were bad circumstances, or things went wrong, or divorce, or who knows what happens. We've seen a ton of stuff. There's a loan we're dealing with right now where a veteran was homeless for a period of time, and we're just trying to overcome those things just to make sure we can document prior history and support the ability to repay. So
Can I
I
jump
would
in on that? Can I jump in on
absolutely.
that specifically, right? Because part of the importance of the LOX is the accuracy in the specificity of the LOX, right? I think like on that deal specifically, and not to like, obviously we're not going to rehash the deal in its entirety, but a lot of the challenge that we faced with that deal is the LOX provided up front was not detailed, and was not accurate, right? So once data starts changing in the process, it really starts to open up like now we got to start stipping. We got to start conditioning for stuff, right? So to Joe's point, I've never, Joe and I have never gotten an LOX that we're like, man, this is too detailed. I wish we didn't have this really detailed, long LOX, right? I think the issue comes when, when we we turn into Mark Twain and we try to spin like this big long story about what happened versus instead of just going bullet. This is what happened. This, and this, right? So I think being really detailed, really concise, and really clear, I think is super important to that.
For sure. Don't tell me what you think I want to hear. I just want the facts. I can make the facts work.
See, and I think that might be part of the things, right? It's like you got a file, and what if I tell you something that's going to turn poorly for this file? But I think the reality that I've seen over years of been involved in this industry is the poor information still comes out. It's just usually past the point of no return, and then everybody's just mad. So what I hear you talking about is like, look, just go ahead and give me all the details, all the hairy, scary stuff, right? Like, let's deal with it up front so that we're not going so far outside of, rights of rescission or times where they can't get your escrow back. And just know. Now, are we also talking like, are you guys doing TBDs? Hey, we're running this. We got a COE. We think we're going to be, but we need to get it kind of underwritten beforehand. Are we talking manuals for that?
So Joe and I, we pre-flight a lot of like challenged credit profiles through our brokers, right? So what I mean by that is if they have a credit report or they have a scenario, they're like, hey guys, this is what I have. What do you think about this, right? Because listen, trying to get an app submitted and get all the loan disclosed only for me or Joe or someone else to say, hey, no, this doesn't work. We can't do it. Now we've wasted time, right? So that's how we sort of try to stem the TBD tide, so to speak, like property wise, because it takes a lot of time on loans that the pull through is not that great, right? So as far as like conditional approvals, which I don't know if that's what you meant, Nathan, like if we have one where like, okay, we have a COE, but we need to have it updated, or we need something updated on the file, or we need a condition in order to make the loan work, we certainly do that. I mean, Joe, every loan you probably do have some aspect of that on there.
Pretty much, yeah.
No, I mean, I think looking at it and saying, all right, we've got a file. All we don't have is an address. So can we even just pre-underwrite this or underwrite this, just assuming? But what I hear you saying, and I think a question has popped up, and I'm going to throw this up on the bottom of the screen so we can review it. But, what are some key items we can provide up front for a more seamless process? Derogatory credit, letter of explanation, verification of rent. And by the way, I'm just going to point out that Joe said LOX. The LOE and LOX debate is running strong in EPM already. I can already sense it. So
absolutely,
we're just going to let that one float. But I'm going to bring it up just to poke at it. But yeah, what can we address up front? I mean, more seamlessly. What are things we should be looking at to tell a better story?
I mean, I don't think it's that. I mean, and Joe, I said I was going to have you address this, and then I started talking, and I can't stop. I think the main thing to remember is like this whole refer manual thing. It's not like a big scary, endless monster, right? So like when you talk about, okay, what all can we provide that would make the process more seamless? It's generally the same things you're going to provide to make any file move more seamlessly. Yes, if it's a manual, you're going to need to have a VOR. You're going to need to do a DROB letter of explanation, but that's the same as if you're doing an FHA manual, right? Like, so it's not like the VA manual process is not, it's not, some big unknown, right? So, I think, the more information that you have that you can provide, the better, right? Like you get a lot of people, they're like, okay, I want to get my conditions. I have all this other stuff. I'm not going to send it in. I just want to get my conditional approval. And then I want to just try to do like a one-touch clear to close with 25 conditions, right? Everything you have, just submit it in. Unless it's a home inspection, don't submit that. Everyone
right,
yeah. But the more you can provide, the better, right? And I think, again, it just goes back to like, I would much rather have the underwrite for me. If I'm underwriting a file, I'd rather it take me an hour and a half versus half an hour and give you a conditional approval that has 4 conditions on it and 2 of them are title. So I think the more detailed we can get, the better, because it's going to provide a lot of clarity. Then it's, you may have had the assets for 3 weeks before you gave them to us because you didn't think you wanted to provide them at your approval. Then you provide them, and then we're starting to ask questions about stuff you already had. Now your client's upset because they're, because hey, I gave these to you a while ago. Why do I have to answer this now? So that kind of thing.
Okay.
Yeah, I mean, just piggyback on that, I put a lot of trust in the LOs and the borrowers with setting stuff up correctly. So from that standpoint, I would say it's going to probably take some practice if you haven't really done a VA loan, or been through the process. I actually shout out to the VA vetted course. I'm going through that right now, and it has a lot of tips on what to be prepared for when you're talking about VA loans and all that stuff. But yeah, derogatory locks, VOR, anything. I mean, your bank statements. I mean, just get it out of the way. Just rip the Band-Aid off. Because the last thing I want to do is give you a 4-week no. So
Right.
if you think it's going to be a problem, put it in there. Just go ahead and get it out of the way.
So I think sometimes we try to force through, like where we get a little embattled as loan officers. Like, we know it can happen. We're going to push on it. Like, we're going to beat you into submission, Phil. Like you're going to have to, it's like, well, we don't have to get to that point. Like, if we get a little proactive from the get-go. Somebody asked here just a second ago, are there any tips? And I think we kind of talked about it, but let's talk about funds to close, right? What gifts are acceptable, especially, does it change in a manual underwrite? Does gifting change overall? Like, let's talk about that.
No, gifts would be the same from family, primarily. I have to double check if it's close friends, but I believe it might be that as well. But as far as assets concerned, the only time when gifts are not acceptable is if we're talking about reserves, and reserves are really only required on rental income. So whether we're talking about a 1 unit, that would be 3 months, multi-unit would be 6. VA does not ask for reserves in any other scenario. And as far as gifts, gifts are fine. So if we need them for reserves to make it turn to approve, that might work. Actually, I've seen it happen before. But gifts are an acceptable source. Now, from the overall standpoint, overall review of the loan, can it negatively impact it? Possibly, but it depends on what else is going on with the credit and the DTI and everything else. I try to look at everything from an overall picture.
So at what point does the residual then affect or support or offset, I guess, the ability? Because, I mean, you mentioned DTI 41%. We can go above that, right?
Mm-hmm.
VA doesn't really have a DTI per se, right? They're kind of like, they leave that one ambiguous to basically it's to the lender's discretion.
Sure.
So can you sit there and give us guardrails, left, right, lateral limits when it comes to, if you've got residuals in excess of certain percentages, we're more likely to offset your DTI by calculations. You may not be comfortable saying that. Can you address, yes, we take that into consideration?
Yeah, we absolutely take it into consideration. As far as the residual guideline itself, 41 is the cap for meeting the exact amount or requiring 120%. If we go over 41, we have to have at least 120%. Now, VA also says that that's a little bit flexible as well. You can use compensating factors in lieu of 120%. I really don't like to go down that road unless we absolutely have to. As far as DTI, the company answer is that our max is 50. Phil's smiling already because he knows if you left it up to me, I'd probably say 45. But I think that 50 is our overall max. Have we gone higher than there? Absolutely. And then I think over 45, 50, over 50, that's really when the residuals will come into play as far as being a main compensating factor. At that point, I'd be looking for at least double of the requirement.
Got it.
At that point, then I feel like, there's going to be enough left over. We can probably use it to support the ability to repay overall. But other than that, from 41 to 50, as long as we're at 120%, we should be good.
Okay.
Yeah, I mean, I think the biggest thing for us is, VA does not publish a cap. I think Joe and I had hearts about this for many hours, and for us, ultimately, getting much over 50, you start to question how we're putting the veteran into a better position. Not to say that,
Sure.
not to say you're not, because I think our matrix, Joe, this will make your skin crawl. I think our matrix says 55.
I think it does. I believe we go up to 55 with compensating factors and a second level review and all that stuff. And then when we're talking about DTI too, it's important to note, we're talking about the back end. Front end, I won't go over 50 on the front. I just won't. That's a business decision. We just don't feel like we're setting up anybody for success at that point if it's a refer.
Yeah. So I mean, ultimately, that's where we're sort of, that's what we're, our leg that we're standing on that 50 cap is, we really want to make sure that when we close this loan, the veteran is indisputably in a better position than them when they started it. And so that's sort of where we parked that number.
I think that's fair. Honestly, man, Ginnie Mae, you have to get securitization as well. Like, you guys are going to sit on these forever, right? There's actually an afterlife. Once a loan is like, hey, look, it's cleared and closed and funded, it doesn't just like sit there on a bookshelf forever. It actually, stuff has to happen with that. Ginnie Mae Chapter 24 has securitization guidelines. They are looking for some aspect as well. That plays into the whole plan. All right, I was hoping we get another question, because I was like, I don't have another question, except you guys have given this presentation. In fact, I think last week you hosted your own class on this. EPM's been hosting some courses lately, just some live calls. What did you go talk about, or what are questions you're getting there that you would like to address with this group?
I don't know. The only thing I can think of right now is VA is very specific in that we need 24 months for a VOR. I think that's, everywhere else you ask for 12. And it's come up a lot in, bringing up the secondary market and everything post-closing. That's come up a lot in audits lately. So I think as far, when we ask for stuff as underwriters, we're not trying to give anybody a hard time or ask for anything extra. They are asking about it on the back end. So I think just 24 months on a manual is required. Even, that's one thing I wanted to point out.
This new environment we're in, I think I only speak for myself, but post-close audit wise, especially on Ginnie files, has been, they really want to understand what we're doing, why we did it. I mean, they're asked for rewrites on loan analysis regularly, but
Really?
and it's not something that is brand new, because I feel like it sort of ebbs and flows like anything else. Like, I feel like they have, it's maybe someone's getting new to the audit position. They want to really, sort of, dot their I's, cross their T's. But, the ambiguity of the handbook, it's great and it is terrible all at once, right? Because we have to be able to, like, there's got to be something that we say, okay, like this, so this is how we apply it to everything, which is impossible. Like, there's literally no way for us to say, okay, this is how we handle every single loan, right? So it's really at that point too, and that's what I love about working with Joe, is because he'll be like, well, we could do this and this, and then we'll try this and this, and then we'll go and try this and this. And I'm like, I didn't even think of that. So, I think it's creative problem solving is really important, on the VA side specifically. And that may also lead to sometimes as an LO being like, no one's ever asked me this before, or no one's ever asked me to provide this before. But a lot of it has to do with just trying to be able to, if we have the end goal, we both have the same end goal of getting the loan clear to close, right? And if, like, okay, this is how we've gotten here. This is how I believe we can get to the finish line. If you can prove this, I think we're good, right? So I think that's a good point.
Yeah, I got one other thing I thought of too. Sometimes it becomes controversial when we ask for it, but in situations where the payment is increasing or they don't have a housing payment right now, I ask for a letter of explanation on how they're going to handle the increase in housing, or even an estimated budget.
Sure.
I find that getting that information, not from the LO, but from the actual veteran, has more weight with VA than anything else, because it shows that they're taking it seriously. It shows that, they're actually thinking about the impact it's going to have on their life and their finances. And just, again, if they can show that they're taking it seriously, I think the underwriter will be a lot more comfortable in signing off on some stuff that they might not have been comfortable with before.
I mean, that makes a ton of sense to me. We see that happen in ROVs, right? The NOV gets issued and they're going back to RLC. They're writing their own letter and why they are asking for reconsideration of value. I believe, and I love how you said that. So I'm going to repeat kind of what you said from my own words so that everybody hears it, right? Repeat it for those in the back. The underwriters are not always looking to create more chaos by asking for different detailed items. What they're trying to do is make sure that the file, when the VA, when Ginnie Mae, when the auditors come back in, they're like, oh yeah, this totally makes sense. This was well organized. The VA has no problem backing this file the way it was underwritten because the veteran knows what they're getting into. Like it's all there. I mean, Joe, I'm probably going to get like eggs and or tomatoes thrown at me next event I go to. But I love, like, if a borrower, new homeowner can write a budget and say, yeah, we're looking forward to this.
Yeah.
Like, we understand what payment shock is. We understand what this. That's beautiful, man. That's somebody who's spent some time thinking about it.
Holds a ton of weight for me and for a lot of our underwriters. Again, I've argued about it on different files before, but I'm like, once I've actually explained the reason I'm asking for it, there's really not any arguments from there on. I'm just like, I just want to make sure that they understand what's going on, what they're getting into. I mean, from all intents and purposes, you're asking me for $400,000. I just want to make sure you're going to pay us back. That's it. That's all we're doing.
This is striking another chord. Nita's probably watching this, our veteran training manager. We got a new course. We got how to build a budget as a veteran active duty. I love it. It's a new course we're going to make just for the veteran community. All right. Hey, we got this. Randy, your name's on here, so I'm just going to throw it out there. Randy put up a little bit of a analysis here. So what compensating factors are needed to overcome Chapter 7 bankruptcy discharge 16 months ago, so not 24, and with new fixed income and low DTI with strong residual? Like, we're talking strong FICO, a purchase. Would you touch it? Does that 16 throw a red flag?
It's a little bit of a red flag, but in those instances, I kind of go off of FHA's guidelines, believe it or not. I mean, VA has their own deal, but we're going to have to be able to document the actual extenuating circumstances that caused the BK, and actually document them. So we really don't, I don't really look at divorce as an extenuating circumstance the same way they don't treat it that way for foreclosure. But, I mean, it's at the same token, we've seen some situations before where spouses have just been left high and dry, and it's just like, well, obviously that this was a bad scenario, a bad situation that they are trying to make up for that wasn't really their fault. I mean, we had one where the spouse basically robbed the borrower, the veteran, blind, and ended up in jail and actually attested to it and said, I did it, I took their money, I did. I'm like, well, then if everybody's telling the same story, let's do it. We'll make it happen.
And I think it goes back to sort of one of the first things you talked about, Joe, is making it isolated. If it's an isolated incident, it was 16 months ago, we can explain it, document it, and it's not they filed BK 16 months ago, and then also 3 months ago they had a late on a car payment, and 12 months before that they had a late on something else. If it's a blip on the radar, I mean, for lack of a better way to say it, we can explain a lot with on a blip on the radar, as long as we can document it to some acceptable extent.
That's awesome. All right, here's another question came up. This one was, would you still allow for grossed up disability BAH BAS income on a manual underwrite?
Absolutely. It's non-taxable. We will gross it up every single time, 125%. Social Security income, you can, without any other documentation, 85% of it is going to be taxable. You can gross up 15% of it. To do more than that, we would need tax returns or some other evidence of their tax bracket and, how much they're paying in taxes every month, every year. But
got it.
But anything non-taxable, you can absolutely gross up. Doesn't matter, approve or refer.
Perfect. All right. Well, guys, I really appreciate that. Let's leave no rounds in pockets, right? When we're done here, anything left that you guys want to cover down on? Anything that you've picked up on that you want to make sure we cover?
I mean, I think one of the main things that I wanted to make sure that I said, and Nathan, I've talked a lot with you and the Better VA team. We're really open to feedback. Getting 1% better every day mantra that EPM, and Eddie preach, we live it every day. If you have feedback, if folks have questions, we want to be a resource, whether you do business with EPM or not. It's more important to me that we be a resource for the veteran community and make sure that we're helping folks, find home ownership, right? So, if you have feedback on the process at EPM, if you have questions on the VA loan process, you know, we want to be here to help fill that void for sure.
Yeah, absolutely. Don't be afraid to ask any questions. I don't take any question as stupid. Even if it's something I can answer quickly, or if it's something that's in the handbook, I will help you guys out, because I know that this process can be difficult, especially when it's a VA, because I know there's all the misconceptions about the issues with the property and everything else that's going to happen with this whole process. But I would say that underwriter discretion is not your enemy. I know that can be a bad word sometimes, but
Mm.
it will let you get some things done that you might not be able to get done on other programs. Now, it might end in a denial just because we don't feel like it's a deal that's good enough for the veteran, or we're setting them up for failure. But in most instances, that underwriter discretion is going to be able to get you out of a jam, or make something work where it might not usually. So,
Well, that's the one difference, right? Chat GPT can't read a letter of explanation yet and make a decision on it. So you guys are in safe hands. All right. So somebody joined late. What's the timeline for a manual? And I know this can change based on, frankly, the industry we're in, but they're asking, should we add 7 to 14 days to a manual timeline?
No, I mean, and I'm only speak for EPM, right? We do 70% manual everything right now, and our cycle time across the board is 19 days. So if you're factoring in 15 to 20 days total, you're going to be fine. Now, listen, if you have a client that lives on the top of a mountain in Montana, you're trying to figure out how to
yeah, that's what I was going to say.
you know, it's things that are outside of. If you have everything and can get everything, we can close it. I mean, we just closed one, you know, last week. And, you know, we were waiting on TRID. We were waiting on the 7-day disclosure, you know, to close. So it's not. I mean, it's our first language, frankly, is manual. So it's not something that really impacts our process at all whatsoever. You know, we have a team of folks that know how to underwrite it, know how to condition it, know how to close it.
Yeah, we have a great team here. We have some folks that used to be supervisors, 5 to 10 years experience minimum, pretty much across every underwriter we have. So income, asset, credit, all that stuff, I think we can handle and knock it out very quickly. The problems, like Phil said, are going to come with the property and possibly the appraiser. Sometimes when you're out in the sticks somewhere, it takes a while for somebody to get out there and look at it. The other point is that if there's a well on the property, we always need a water test. So
Sure.
if you guys
Right.
know about that, just go ahead and order it. Just get it out of the way.
Yep. Get that water test done. Somebody actually just commented back to you that a last manual at their company with the EPM was 18 days clear to close. So there you go. Somebody attesting to the fact as well.
Look at that. I don't pull the numbers out of nowhere.
Yeah. I mean,
not most of the time.
Back up. Not most of the time, right? Yeah, we calculate all our numbers here. I love it, guys. Okay. Well, this is great. I really appreciate you guys taking time, helping out, just conversing with us on this one. For the most part, when somebody's got a loan with EPM or they're hearing about it, and I will say too, in Vetted VA for Pros, we've got lots of real estate agents, we got some insurance people. Like, you all need to know that the manual underwrite is valid. And if you're getting feedback from a veteran who's like, oh, I got turned down because my credit score was like 620 or below 620, it's like, well, hold on, like, let's get a second opinion, because there might be some extenuating circumstances, some other ways to get through that. We all understand we've got stuff. The Vetted VA Go Bag, we partnered with FinLocker early on to help them, but like Chris's best analogy ever was like an old cooler that we left unattended all summer, right? It gets all gross and yucky inside. Frankly, credit scores do that. Credit accounts do that when you're out and you're not paying attention. You got to open it up, clean it up. It's yucky. It starts with, it's hard. You don't want to touch it, but you got to. And I think you guys are the right kind of team to look at opportunities and options to help people get on the right path. The other things, I mean, if somebody's got a question though in the VA Manual Underwrite with EPM, their first line of defense is their AE, correct?
That's right.
All right. It's because you guys have a chain of command communication structure in there as well. That's correct?
Yeah, absolutely. Yeah. Go for it, Phil.
I mean, we have a lot of really great AEs, and even if they're not, they have access to us, so, I would love to turn loose my email address and Joe's email address to just general population. and then it would just blow up in my face because people would complain that we're not getting back to them fast enough. I guarantee you, if you reach out to your AE at EPM, they'll be more than happy to answer your question, or to get our scenario group involved, which includes Joe and I. So that's the best and easiest way. Now, if you have file and process, right? If you have a file and process and there's a problem, you have access to the underwriter. Every single underwriter that works for me has my email address in their signature line for escalation purposes, right? So if you have a file and process you have an issue on, or they have a question on, you can reach out direct on that for sure.
But every email you guys are writing means you're not underwriting a file. So I'm always cautious. Even with Phil, I'm just cautious emailing you. Like, I try to do it at midnight, and you still respond to me immediately. And I'm like, dang it, I meant for him to get that in the morning. I didn't want to interrupt his workflow. And I'm like, oh, poor guy. Well, I appreciate you guys. Thank you. Some good communication on this. The VA Manual Underwrite is nothing to be afraid of. My big takeaway here: write your letter of explanation up front. Give all the details. Give us a good, clear understanding, SMEAC, of what's going on in your file. Everybody knows what's happening, why there are some blemishes, why there's some scratches and dings that we have to get through, and what people have learned from. Get a letter from the veteran explaining why it's important, what they've learned. Like, let them write the letter, please. They're the one borrowing the money, not you, right? Like, if they can't write a letter explaining what happened in their world, and they're borrowing money, that's a sign. Cool.
Absolutely true. And I would just say, if for some reason it's a denial or a no, it's not a no. It's a not right now. So we'll try to at least give you guys a path to proceed in the future, and hopefully come back to us and make it work then.
Awesome. Well, I appreciate you guys. Thanks for giving us 35 minutes of your time. Thank you, everybody. LOE versus LOX is back live. It is the argument that will never. You know what? If Dana's listening to this for UFC, like, if Dana White's actually listening to this ever, or if somebody knows him, please tell him the next UFC fight, I want one fighter with LOX and one fighter with LOE on their back, and I want to see what happens. Like, that'll put it away. That's how we're going to finish this.
Perfect.
All right, you guys. A lot of good shout outs for Joe. Thanks so much. Thanks, everybody, for tuning in or catching the replay. And we'll talk to you all soon. Take care.
Thanks.